A lot of price action today, but the net effect of it was, well, not really anything. In fact, right just before the Fed announcement at 2 p.m. today, the S&P was trading right around 5,020. It closed right around 5,020. Of course, that belies all of the price action and volatility that occurred in between, a more than 1% surge in the S&P and NASDAQ while Jay Powell was speaking. But as we got closer to those closing bells, all of those gains faded on the day. What we did see hold was some buying action in the Treasury space here, 7 basis points higher on your 2-year yield, similar moves across the curve here. So we start to talk about this idea of yields now start ticking down, even though some people are trying to maybe bid up risk assets. So not Bitcoin, Scarlett, a lot going on in that space. Not quite clear what, but you see the drop back well below 60,000.
All right, let's get you a couple of individual movers here. We're going to start with AMD, Advanced Micro Devices, down almost 9% on the day. The chipmaker gave a disappointing forecast for AI processors, AI chips. Now, the bar is pretty high here when it comes to AMD and any company that does business related to processors for AI. For instance, AMD says it sees $4 billion in revenue. That is a move up from its previous forecast of $3.5 billion, but well below the most optimistic forecast among investors of $8 billion. Viking Holdings, the luxury cruise operator, IPO'd today. For its first day of trading, climbing almost 9%. It did gain as much as 12% on the day. It raised $1.5 billion. And of course, that compares with its IPO price of $24 a share. But the IPO, of course, another indication that that initial public offering market is normalizing. It is recovering after what had been a fairly slow, at least start to 2023. Now, our top story this hour, the Fed. Treasuries got a boost after the Fed said it will shrink its balance sheet at a slower pace. What that means is the central bank's quantitative tightening process will be more gradual to avoid causing disruptions to short-term funding markets. When you add it all up, it's yet another dovish or maybe less hawkish step from the Federal Reserve.